Okay, good evening or good morning where you are. My name's Steve Ruffley. I've been a premium presenter on FX Street. I'll probably get on for a decade now. You probably have seen my webinars or my market commentary on FX Street, and if not, maybe you've seen it, kind of in the press or in Google, etc., etc. So I guess tonight, with my last webinar of the year, I think a lot of people are winding down, getting ready to see the back of 2020. Not a great year, I guess, for a lot of people. Certainly, it's been an interesting one, but I think for me, the webinar tonight is about 2021 and what next year is going to hold. A lot of changes, certainly had to be brought about by the coronavirus. We thought we were all sick and tired of hearing about Brexit, but that's almost a welcome break in COVID times. Got rid of Donald Trump again, something I was incredibly vocal about and sure of, that Donald Trump wouldn't do a second term under any circumstances. I certainly wasn't discounting that he'd be president, for a second term. But even if he was, I was 100% sure he wouldn't do another 4 years, but obviously that's going to make the landscape of 2021 pretty interesting. Biden's certainly not got an easy job. He's got to roll out the COVID vaccine, and he's going to get America, back to being one united country, because it's very, very divided at the minute. A lot of problems that have just come with COVID, trying to, redress the work-life balance, kind of industries that have been heavily affected by it, and also the inequality, yet again, something, a theme that I've talked about over the last few years, that when the gap between the rich and the poor get big enough, bad things happen. Well, that was 8-9 years ago, and now we're at a point where, some of the richest people in the world have gained 1.9 trillion in wealth. And, we've got people, of middle incomes now living day to day and in food banks. So if that's Donald Trump's idea of making America great, then he certainly has. He's done it. He's made America great for the ultra wealthy that were already doing pretty okay for themselves anyway. But that's not a uncommon theme. The way that's happened all over the globe, by keeping interest rates so low and everything being too big to fail. We've just pushed the money up to the top to people with assets, and seen them appreciate, and people that have no great desire to go out and do things with the money, just kind of keep it under the mattress or stick it in lazy investments. And I guess a lot of that reason is why we're seeing the kind of stock markets going up, because people just assume that the government's got a backstop, and it can kind of bail anything out forever. That's basically what the Fed came out and said yesterday. Powell said that they'll just keep buying stuff until we're back to full employment. Well, you tell me, what's full employment? How does that work? Because, I tell you what, there's different types of jobs being created. And if you've lost your job, fairly recently, you might never be getting a job. This idea we can just reskill and retrain people, is a bit of a myth. So big changes coming over, the kind of, the global economy, the global workforce, the aging workforce. Other big things are going to happen, in the next decade, the shift of generational wealth, when the boomers start to die, which is inevitable. That's one thing, that they can't dodge. They can't dodge dying. And when they pass that, money on to the future generations, it will just be spent in a different way. And certainly places like where I live, New Zealand, you see this this big kind of argument that house prices are too high, and that they don't make any sense, based on the average income, which it doesn't. That's fine. But the problem with New Zealand has always been supply. It's incredibly difficult to build a house here, and I'm testament to that. I'm 2 years delayed building my house now. It's massive, so that there is that. But it shouldn't be this hard. It should be this hard to build a house. But in actual fact, it is, and it's very expensive. And this is the problem. There's been a lot of shoddy homes built, and a small amount of supply dripping through to the market, and then ever increasing demand. But you see a lot of people that bought houses in the 60s, 70s, 80s, even the 90s. You're talking about the same generation that have amassed multiple properties, and when they go, that the supply is going to hit the market. And as we know, even the basics of economics still works. That if supply kind of increases and the demand doesn't keep up, that the price has to come down. So that's not something unique to New Zealand. It's certainly something that you're going to creep through to certain areas of London, and again across the globe. There's been a lot of people that have just been hanging on to assets because they just seem the safest investment. They seem to go up no matter what. So that's going to be very interesting how the world's going to shift. So my kind of point about talking about those things, kind of makes you kind of, it's twofold. So the first one is, okay, that's the future. So anything can happen with policy, anything can happen, that we've seen with COVID, anything can happen in the world. What we've got to try and do is now understand how we can whittle that down, how we can, look at some intraday products and try and make some money in the short term. Because having that kind of, big, kind of macro outlook is okay sometimes, but it can cloud you. And, what I said about, kind of economics for a start, one of the other webinars I've done fairly recently on FX Street was trying to explain to people how I've untaught myself economics because, being an economist and a trader for 20 years, there's lots of things that just don't make any sense anymore. There's no point trying to, look too deeply into non-farm payrolls because it's pretty much irrelevant. The jobs that created not very good jobs anyway. And, just the sheer numbers of it, doesn't make any sense. It can be plus 300,000 one month and then flat the next. It's not like we're creating 300,000 doctors or, kind of 300,000, kind of highly paid, highly skilled jobs. It's just, the non-farm payroll doesn't work and reflect, where America is. And you have to really still focus on America because, that's what Donald Trump wanted and that's what the world seems to crave, follow America. And, we're going to start moving away from that, over the, the kind of coming years because people are just sick and tired of America because, not to get too personal, but they're idiots. And, their time of being at the top is over, unfortunately, and they don't know it. I mean, that 4 years that, Trump was in has done irreparable damage, and I don't know if America will ever recover. So it wasn't just, showing themselves for how deeply divided and how, kind of, inherently, just kind of elitist they are. But it also gave China a foothold for 4 years to be able to go and do, really whatever they wanted. And, they even came out and said there's no point, trying to sabotage Trump because he's doing just too much of a good job on himself. So, when Biden comes in, what's old super granddad going to do? He's a consummate, professional and, lifelong politician, but, the guy's old. You know what I mean? It's kind of, this is the problem with the world all over. We just have the wrong people in the wrong phase of the life making decisions and actions that they're never going to see the consequences of. So, places that are doing all right, I'm not saying New Zealand's perfect, but, we've got a fairly young prime minister. Look at other, the kind of countries in, in kind of in Europe. They've got other younger, kind of leaders and certainly female leaders. There's lots more kind of emphasis to kind of get on and do stuff. And I'm not saying that, they've got it sorted or, they've got it right or, these things aren't going to kind of hold to them in the future. But, certainly having a kind of 76-year-old president, completing his term and being in his 80s, is that really the way, we want? How long can these guys do? Can they put the 14, 16-hour days in? Can they do things, when, it comes to the crunch and, make the tough decisions? It's politics and the world and business is a young man's game. There's a reason why people, have the dream of retiring early, at maybe 50. Not 30 years later doing the most important job in the world, but that's where we are. That's the situation. What can any of us really do about it anymore? But again, my kind of idea about taking these kind of like bigger picture ideas and kind of really trying to crystallize them down is to don't get too worried or kind of too caught up in your trading about the data, about the GDPs, about even kind of forward guidance and interest rates, because it's all pretty much meaningless. All the governments, the central banks have come out and agreed, and what they're going to do is they're just going to keep the show on the road and stop the wheels falling off. It doesn't matter about how much debt is created. It doesn't matter about the kind of blips here and there. As long as the wheels don't fall off, everyone buys into it and everyone's happy. So the whole kind of fundamental versus technical kind of things I've talked about for many years are kind of off the table at the minute. because you can't rely on the data, that's brought through, especially under Trump. I mean, the Bureau of Labour Statistics are meant to be independent, and the non-farm payrolls are meant to be the most, highly guarded secret in trading, terms. But you're telling me that Trump didn't march down and say, "I want some amazing figures," and then all of a sudden there was amazing figures, and all the idiots jumped on it, and just kept this kind of charade, going, and the markets keep going up because that seems to be the only indication of a strong, successful country is having, a stock market making record highs, because everyone benefits from that, don't they? No, of course they don't, but that's the way it is. So kind of breaking things down, what I've started to do is just kind of look at things a lot more kind of technically, and, really just looking at things, based around things that I do understand, Fibonacci, things where levels are overbought and oversold, and it's very easy. Take the DAX, for instance. It's a massive bull run. You don't have to, be a genius to look at the charts and say, as I said, a million times, rejection, market goes higher, rejection, market goes higher. They have this opportunity here, where the market could, correct, and then something significant could happen, and the market could just, not crash, but could just start a nice, new, sensible range down here, and just, kind of, be more realistic, be more kind of, achievable. But no, the market has to get pushed back up, and it's all about, again, hitting those record highs. So what I've said to you a million times over is just buy the dip. Anytime you see the market low, buy the dip. So, things like this, for instance, the Fibonacci. So we didn't get as low as the 423.6, but every time, your hourlies are great. Every time, you kind of hit, points of interest on that higher time frame. So you get within these kind of like points, then you just draw a line, because it's not only an entry point, it's an exit point. Entry, exit, entry, exit, entry, exit, and then the 50% is a pivot point. And what you can do, is try and catch that wave as it comes back down. And all you're looking for is record highs. You can spend your entire life, like people have done for the last 10 years, trying to pick the perfect top and waiting for the crash. But as you say, the crash comes and you wait for it. This is it, the end of the world. And the next month, you stopped out. So there's no money anymore, or hasn't been really for 10 years in the stocks trying to be right. And certainly never trying to pick a top in the market. That hasn't worked out for pretty much anyone I know. And the one story, the people that caught it on the back of COVID, they're few and far between, because if they'd held it for any, normal length of time, or kind of like normal things in trading terms, to think that, whole industries might be decimated by the world essentially shutting down. Well, once you kind of, the market bounced back, if you didn't get out, then, you're at record highs again, and then no one knows where it's going to stop, or if it can ever stop. And, that means your short positions are getting squeezed, and, you're hemorrhaging money. I mean, just look at things like Tesla shares, for instance, but, how can you beat somebody who comes out and says, things like funding secured, and then, basically gets in bed with Trump and the Saudis, the only person who owns an American company that can, have a manufacturing plant in China, and that's all right, because Elon's all right. We want Elon to be the third or second richest man in the world because he's a nice guy. Let's give him lots of government contracts. Who needs a Tesla? Does the world need Teslas? No. But it's all the government contracts with the satellites and, this kind of, internet for everyone nonsense, when it's really, all for spying on the human race. But anyway, that's a conversation for another time. So things again, like the stock markets, it's just a simple dip buy trade. You got the Nasdaq, the FTSE, all your fibs, again from the low side. The S&P, again another one, just great on these hourlies. You see the 423.6, you see the rejections. The market's building up pressure, rejecting those closes lower, and then market consolidates and goes higher. And again, I feel like I've gone through this particular type of example a million times on the webinars over the years. So I'll just try and make it a little bit more clearer, because a lot of people have said over the last few months is like, oh, I don't understand how you make money, Steve, out of this stuff. You don't kind of tell us how you get into a trade. So, well, I'll tell you exactly how we get into a trade, and I'll show you what I look at, because these charts have been available for free for probably the last 5 or 6 years, and you can get to see exactly what I see. But what you've got to do is understand how you're trying to make money. So I look at the dailies. There's lots of green candles there, and it's quite a steady uptrend. So what am I looking to do? Well, I'm not trying to pick the top of the market and see it explode. What I'm trying to do is find low value, get involved and try and make some money. So again, as I said, with the hourly chart, that's generally where I'm looking for my picture. But the money's to be made here, isn't it? To the right-hand side of the chart. So it's no good looking here and going, well, I would have bought it here, Steve. I would have bought it here and got out here. That's wrong. Wrong. That's not what I'm talking about at all. Because the money's made here and the money's made here. So if you're looking on this hourly picture and you're involved here, you've already missed the move. So what you need to be looking is on the 15-minute charts and the 5-minute charts. And these lines are just in, coincidentally from another one-to-one session I was doing with a trader in Canada. And I said, so when the market was down here, I said, well, what you're looking for is low value. So at that point, there was nothing past this line. So I said, what you've got to do is draw a line in the future to where you think, some time will elapse and some move will happen and try and predict the future. It's like, well, there we go. So what you've got is here, right? A low point, cutting through here. How basic is that? So the market, to the right-hand side, remember, none of this had happened, which will probably, as I said, probably go up to try and buy some low value on the short time frames. So even if you just buy around the lows of the Bollinger Bands, or again, this daily resistance, when it's gone up and thought about it, this is now support resistance. It's a point of interest. And what happens? 1, 2, 3. 45 minutes of buying. Thanks very much. A red candle, get out. You haven't given much profit back. Yeah, a very short-term trade. A scalp, if you will. Okay, people think scalp's a pip. It can be. Or a scalp can be just holding a trade for 15 minutes, half an hour. Whatever definition you want to put on a scalp. You can argue with it till the cows come home. I've done more trades than anyone else in this webinar. I've done probably millions of scalps in my trading career. All the definition of a scalp is a short-term trade. We're not direct market access traders. Well, you're not. So, you're not to lead on the bid of the offer, for one pip. You're looking for a short-term movement to get in, get out. As I say, you can even break this down to the 5-minute chart, and you're still looking at the same thing, as it gets low to this trend line. I mean, how basic is a trend line? You got people out there going like, Steve, but high Kaneshie candles or point and figure charts, or I've gone back to looking at market profile. Why? Traders have this crazy notion, obsession that they have to find a new way of interpreting technical analysis, or if they just looked at things in a certain combination, they'd just be better at trading. It's nothing to do with that, right? Trading is understanding yourself, how you interact with the markets, and just finding a trend and going with it. That's how simple it is. So everywhere along this line, buy it. Great trade. Don't give too much profit around. Comes back down. Buy it. No, don't really make or lose any money. Yeah, you couldn't really lose any money. Yeah, you might not make any money, but it doesn't matter. Yeah, buy it. A little bit of money. Breaks through. Okay, well, maybe average in to the Bollinger Band or average in low till it gets back. You might not make any money. You might not lose very much money because it doesn't go down very much. And again, just all along the trend line, buying a little bit, getting out, buying a little bit, getting out. Because yes, everyone would love to have bought 300 lots here and then held it to get out here. You can do that if you want, but what I'm saying is you tie up all your P&L, you tie up your capital, you tie up your opportunity cost just by letting it be in the market's bitch and letting it go up and down and your P&L swinging. So why don't you buy 2 lots here and set a target of somewhere in the future up here and let it go up and down. But in the meantime, intraday trade, buy some lows, scalp, the in-between, get in, get out, and everyone can do this. And it's just another kind of simple technique that I've been using with traders to try and to, drum into them that it's not about being right. It's about being right at the right time. You can look at all your indicators and say, well, Steve, your indicator is saying that, the market should sell off. Well, yes, in normal terms, it should sell off because it's overbought. But however, there's somebody there in the Fed or Trump or, someone in Goldman Sachs that goes, yes, we know it's overbought, but look, we have all this free money and liquidity to keep buying stocks. So we're just going to keep buying them. So the technicals, the lagging indicators have no relevance. So look here, market, massively overbought, massive overbought. It should come down. Yeah, you do. It does come down. It comes down about ticks, because there's more buyers than sellers, and it shoots back up and gets all the people that are looking for that elusive all-time high winning, trade where they just short it and the market collapses, and they get squeezed out. 5-minute charts, obviously the lagging indicators are going to give you, a bit of a more raw kind of edge of the market, kind of scenario. So it comes down, but as soon as it comes back down, what does it do again? Bang, goes back up. So all you have to do is look at any stock market, the DAX, the NASDAQ, the S&P, the FTSE, and look for a point, on any chart where it's red, and when it's at its most red, buy it, because the chances are it's going to end up green sooner rather than later. I mean, how hard can that be? How hard can that be to trade? Just buying dips in any market that's going up. And it's not just it's done it for, a couple of weeks, a couple of months. It's done it for about 10 years. And now we've got the Fed coming out saying that we're going to buy everything we can until, employment's back up, full employment. But might as well just say we'll keep buying everything until, the end of the world, until, we just run out of money. There's no more money anymore. We just literally have used it all, or whatever the end game would ever be. And again, the other thing to kind of remember is, to look at, the big news events and things that are in the news, because people trade news. Just another good one. Just, the, New Zealand dollar versus the US dollar and the pound versus New Zealand dollar. So obviously, we've got the world out there, coming into Christmas and everyone's on lockdown, and, the new tiers are going to be introduced, and, can you see this family member? Can you not see that family member? Can you hug? Do you have to wear a mask? Yeah, and everyone's looking at New Zealand, where I am, going, it's amazing. I don't know what masks look like. Never had to wear one. We had 2,000 cases of COVID. That was it. Never saw it where I was. Literally didn't have one case of it where I am. Not one. Still had to do the lockdown, but we did it for 5 weeks, or 4 weeks, an extra week. Did it, bang, gone, finished. So New Zealand suddenly the most amazing place on earth in the eyes of, the media and the eyes of the outside world, because we're clever and we beat it. We're amazing. We're not. We're just a long way away. We have 5 million people and the same land mass as the UK. The very reason why I moved here, because why would I live in England with, 60 million people, everyone squashed in, when you go to New Zealand with the same size of 5 million people? So that was my logic. Go somewhere, where there's less people. Go where there's more opportunity if you're like me and have money and can do anything you want. That's what I did. But I did it 3.5 years ago. So I knew this was coming. Not the pandemic, but I knew there was a shift in it. I was more looking at it for the social unrest, as I told you, the gap between the rich and the poor, people getting murdered on streets and, uprising and riots. That might still come, by the way, but not on my land, because I'll shoot you. And I've got big walls and you can't get in. But anyway, by the by, I was right. The world was wrong. Yada, yada, yada. I'm always right. This is my problem. Yeah, I'm always right. But I do things with it. I don't just sit there talking about it on webinars like this. I make big moves, like moving to a place I've never been to. I go, to the other side of the world. So, as again, think about things in the news. So New Zealand's in the world global media, because Jacinda's amazing, which I'll go into another webinar, because she's not. But New Zealand's amazing, so everyone's buying the Kiwi dollar because it's, that's it, isn't it? It's the safest place on the planet. But you can see, things go up and things go down. There's a couple of things to think about this. That the Kiwis appreciated, about 10% in the last kind of like 3 or 4 months, right? And that's too much, right? Because we don't have any tourists coming into New Zealand, which was worth about 50 million a day. So all we've got is exporting. So New Zealand, famous for, beef, lamb, and, timber and that kind of stuff. So that's going to get more expensive, isn't it? So when you've got no money coming in from tourism and all your exports are getting squeezed, you're going to have to do something. So it's all very well the world thinking that, you're the amazing, you're the safest place on earth, let's buy their currency into strength. Well, they get to a tipping point where some things have to change. Now, you've been keeping up with the amount of news and things like I do. You've got, New Zealand only 4 or 5 months ago was talking about negative rates. So negative rates, we've now got, a property, kind of kerfuffle where, the markets are overextending and becoming, very, highly valued. Well, then they're not really in global terms. They're dear for New Zealand because people don't earn very much money here. But, compared to houses in England, they're still relatively cheap. So, what we're going to find is, this tussle with the real world expectations of, can we bring interest rates down now if houses are high? Well, what does it matter? They're already high anyway. But if somebody, has bought a house in the last, year, they still have to service that mortgage, don't they? So, if any slowdown does come in the next 6 months or 12 months, which invariably will do, they're still going to pay that mortgage off. So maybe negative rates and making that cheaper is still a better option. So it doesn't matter that prices might still go up in houses. That affordability might be a better toss-off. And also, your currency. Yeah, you've got all these exports that are becoming more and more expensive. How do you bring your currency down? Well, the only way I know is by cutting rates. And if you talked about negative and don't do it, it's really going to go up. If you talk about it and come down, at least it's going to make a dent into that preemptive, kind of bullish momentum that was pushed up by the speculators. This is all speculators. It's not people sat out, in the central banks going, yeah, we should buy, New Zealand currency because them guys, they're properly switched on. Yeah, they know everything about the world. They're smart as. It's nothing to do with that. It's the hedge funds and it's, the kind of speculators out there pushing it up, to squeeze people out. They're expecting these negative rates. And then when they do come, which I still think they will, they can have, an even greater short from the top. But that's not going to make you, the average trader, any money, is it? It's not going to make, your average, kind of intraday trader any money. So again, what the kind of idea is, you start looking down to your hourlies, your 30 minutes, your 15 minutes, and, look at the charts are telling you. Okay, so this is, good on the 15 minutes, buy, bang. You see these big, kind of spikes up. You see the market get supported. Yeah, so you're buying again. You've got all these opportunities to buy from the short side. And now, again, we're finally, not quite above the expansion points. And we're at this, decision point, the good old 50%. So the option is we could see a quick move and profit taking anywhere down here. But again, what you'd be still looking to do is go with the overall trend and buy these low points and go up. So, that's just the one thing, that's interesting, because it was a country that was, perceived to be just doing its own thing. And then COVID came along and it seemed to be a hero among nations. But it had its own problems, trying to, deal with affordability, trying to deal with people's hugely leveraged debt and people's ability to maintain debt. And that was all about bringing interest rates down. Let's bring interest rates down. Let's make sure people can afford to live. And then all of a sudden it's like, oh, hold on. House prices have gone through the roof. So everyone's got a house. They all think they're rich now, but they're still in the same amount of debt, if not more, and wages aren't going up. So the problem of interest rates and what that can do for people's affordability hasn't gone away just because your house is worth more. You're still going to live somewhere. So that's why it's interesting how COVID has changed the perception of things. And again, that's by not reading too much into it, but reading the overall sentiment that this country, here was going into negative rates. And now that might stall for other reasons or might change for other reasons. So will there be a big continuation or a big reversal? And, conversely, looking at the pound against the New Zealand dollar, we had Brexit, didn't we? It seems like, when have we never had Brexit? Brexit. I would never say that word again. I won't care. But you look back in history, the pound against, the Kiwi. As I just said to you, we're talking 60 million people in London, the financial hub of Europe, if not the world, versus Auckland. Yeah? What's Auckland got? Ponsonby, and it's got a nice harbour. That's it. There's nothing else there. Nothing. Literally nothing else there. There is no industry. There is no big buzzing business. There's nothing. So what, if you're going off this currency, what's more valuable? The pound or the New Zealand dollar? Well, it's the pound. So we've had our high points and our low points, but really it started going, wobbly after Brexit. Well, Brexit's, seemingly a couple of days away. If you've listened to me, I've always said Brexit was going to happen, and it did. I've always said the deal was going to be done, and it will, because there is no alternative. There's no alternative. A no deal doesn't suit anyone. So a deal is going to happen. So, again, you look at all these things that are priced in. So this could be a nice low point, but it doesn't mean that when the finally, the dust starts to lift and New Zealand is just like everywhere else getting over COVID. And it's like, oh, hold on, Steve. I know you said about, they were great at the COVID stuff. And you said, Cinder's amazing and all that kind of stuff. But people still don't have any money. And people over there still have crappy jobs where they think 30,000, sterling a year is a good job, which they do. It's like, yeah. Oh, well, yeah, stuff that then. Let's get rid of that Kiwi and go and buy, some more pounds, because let's say London's back, the coronavirus is done, we're back in full swing, everyone's back in London, bang. So the pound is. So you're looking for opportunities. And again, that's the longer term view, because nothing's going to get, done overnight. But the biggest thing for the UK is like it's starting to act like the UK once again. It's, I know it's dithering around with Boris and this kind of stuff, and the UK and political systems all the world are an embarrassment anyway. But we came out with a vaccine, we approved it, we're sticking it in people's arms, and we're getting on with it. Look at Europe. Yeah, the Pfizer, vaccine's made in Germany, and they can't set a date to talk about when they're going to approve it. We're already rolling it out and getting it into people and getting stuff happening. So these are the kind of things where there's bad stuff happening, but then out of the bad becomes good stuff. So as you come down to the dailies and you think, well, actually, the reality is maybe coming forward in the next kind of days, weeks and months, if the UK starts saying we've got COVID under control, and yes, we've had a lot of cases and we've had our lockdowns and Christmas is cancelled, blah, blah. But in January, yeah, stuff's happening. We've got people on Oxford Street, things are happening, and these low points can suddenly be points of interest. So when you look in your fibs again, as I've said, I'm much more bullish the prospects of the UK than New Zealand, just because, New Zealand's been able to borrow its way out of trouble, as Australia did, because they dodged a financial crisis. So they didn't have to pay the first time. So they still got money this time. But, everything catches up with you. So the low points, you buy the low points, consolidation goes higher. So even on your 15-minute charts, your fibs are working again, rejection, bang, higher, your 50% pivot, it comes down, don't be too greedy. Don't try and sell it on the way down as well. Just look for the low points. Yeah, you try and get in here, nothing happens. But you don't risk much, because it doesn't go down too much. So you don't make any money. It comes down here, bounces back, money, big bounce, sells off, gets back inside. You might be brave and buy it down here, let it come back up. But even when you get the confirmation, bang, 2 green candles. Yeah, 5 green candles. Green candles, comes back down. So what you're going to do when it gets here? That's right, folks. Look for it to break down, buy, because it should go higher. But again, it's all about being right, as I said, at the right time, and picking those fibs and picking the time frame, looking at the correlation to other markets, because that's something that annoys me, that people don't do enough of. It's like you don't look at the news if you want to know what's happening. Why would you look at the news? News is created by journalists, and it's created by, Rupert Murdochs of the world and people that want to mess with your head. You want to know what's happening in the world, look at the markets. Is Brexit going to happen? What do you think? It's up here. If Brexit wasn't going to happen, where would it be? That's right, it'd be down here. Oh, why do you think that, Steve? Because everyone that knows all the information in the markets would have got short the pound, and it would have been down here, because that's how markets work. So when you look at the dailies and the weeklies, I've told you, it was decided down here. That's when Brexit was decided. Are we going to have a hard no Brexit deal? No. No, we're not, because we had the opportunity and to go down further. So we bought it back, supported it. And where's the pound going to be? 142. Like I've always said, because that's where it's meant to be. But again, just having that longer term overall view and trying to put all these ducks in a row and understand everything isn't necessarily going to make you money, because you're going to have to be holding it like I am for the last, 8 months, 9 months, and waiting for your big return. Well, that's great. In the meantime, you've lost all this opportunity to make money. As I say, on the same on every chart that I've gone through and cycled through, you just look at the 5 minutes or the 15 minutes, you find the fibs, bang, you buy it, and it goes to the next fib. Oh, you buy it, the next fib. Low, high. It isn't rocket science. Stop trying to make trading difficult. Stop trying to fight the markets or fight your intuition or fight with yourself over, well, am I right? Am I right in my technical analysis? Am I the only one that's seeing this? You're all seeing the same information. We all see the same information, and it shouldn't matter. And that's the other great thing about having things like my charts and IV charts is the levels are in, the lines are in. I loved it. The Fed comes out, says a load of nonsense, bang. Market comes down really quick. I only sell the euro, so I didn't actually do this trade. But it came down to here. Look at your 15-minute charts. Bang, 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 straight back up to the fib. Yeah? But on the hourly, the fibs couldn't have worked any better. Buy all the way back up. Dollar, sell all the way up. These are to the pip, to the absolute pip. Gold, all the way down, 261, pretty much to the pip. Bang, all the way back up. So if you don't have a setup like this, you don't have your levels already in play, and you're trying to do your levels in trading, you're always going to be the back foot. You're always going to be behind. And that's why I said to you, with this, like when you look at the overview, this is your world. This is your window to the world. You've got your stocks, yeah, your Nasdaq and S&P, Nasdaq and S&P. You've got, the DAX, which is, the measure of Germany, and, the FTSE. Again, look at that market, easy one, all the way down to the 50% retracement. Just as the market's open, bang, all the way back up. 10, 20, 30 pips for nothing. Why? Because you buy the dip. Stocks go up, buy the dip. So that, and this is kind of winners of the world. The only thing that's got a better whack at the minute is gold. Look at gold. The stocks are high, yeah. So that's risk on investment. Why is gold high? Well, partly for the reason is because why isn't it? Everything's cheap. Why is Bitcoin back to 22,000, making record highs? Who knows? There's so much money out there. We've got to put it somewhere. So buy everything. And also the dollar's getting a bit of stick. The dollar's coming down, which is leading to, kind of pound strength and euro strength. Someone's saying, why is the euro so high? Well, I mean, the euro's high just because the dollar's selling off, but that's not going to last forever. I mean, look, we've seen a big, downward trend in the dollar, but dollar's still the world currency. We price all the commodities in dollar. It's the global currency. And once Trump's out, we've got somebody sensible growing up at the table, then, the world's going to have some faith back in the dollar. The dollar's just really kind of selling off just because, I don't know, it's just in that kind of cycle at the minute where it's just kind of, it's easy to dump out some dollars, where the kind of market's been so long, because no one's buying, the Japanese yen because Japan's got it sorted out. I mean, this, without going too much into Japan, the whole zombie economy, the Nikkei is basically owned by the government. You've got 10 or 15 people for every vacant job. You've got empty streets and houses. It's a zombie, economy. They're never going to be able to reproduce the numbers on their, their population. They're a dying population, an aging population that's never going to be able to get it above where it needs to be to kind of, move forward. So Japan's done and finished. But, sorry, but, it is. But, it's a safe haven in these uncertain times, apparently. But that's just in safe haven, kind of market terms, in money terms. But you've seen this tight range. And what will happen is tight range will happen. We'll probably, break this low again, maybe get just below 100. And then you buy everything. You sell your house, you sell your firstborn, you buy as many dollars as you can down there. And that's when you do leave it for a couple of years, because it will be back to 113, 14, 115. But in the meantime, again, really, it's just using the hourly charts, and yeah, I mean it is, it's a sell high at the minute. So what I'd expect is the market breaks below here, and then kind of consolidates, and we see that one big push. Then it's just a buying opportunity. So again, it's the timing. Like I only buy the dollar low, so I don't really look at the dollar too much, because it is selling off. So I'm waiting for one big, kind of sell off to happen, and then the market to consolidate and start to move back up. And then I'll just dip buy. I'll just keep buying it, from the low. But right now, because it is, quite an aggressive sell, I'm just staying out. So this is the other thing I'm telling people is, I've told you what I do. I buy the lows in the stocks. I sell the highs in gold. I buy the lows in dollar, sell the high in euro, and buy the low in pound. But if things aren't working out as I want, or I find them too difficult, like, the dollar's not bouncing enough, then I look at something else. And I say, well, maybe I should sell the euro high. Well, it's not looking too great. Well, that's not looking too great. I'll buy the pound low. And, you kind of become quite picky and choosy with your trades, because when you trade as much size as I do, you can't really get it too wrong. If you're trading, like 400, 500, 600 lots into an average position, and it goes like this against you, if you're in the wrong side of it, you're in trouble. You're in serious trouble. So, what I'm looking for is those high probability trades and those points of value, that fit in with my view, my overall view of the world as it is, and then just get in as much size as I can. When the market goes my way, get it all out. So again, it's about for you, picking what works for you, picking what looks right. As I say, if that dollar starts to bounce up, I'm happy to sell gold, because, we're coming into an era now where, the vaccine should be saving the world. Gold, if it was going to be above $2,000 and go to $3,000, maybe it would. Maybe the world's waking up that gold isn't the store of wealth we thought it was. It isn't protecting against inflation we thought it was. It's old thinking. And maybe that's why, gold's going down and Bitcoin's going up, because maybe that's the future. It's not the future of digital currencies per se. It's not the future of, how we're going to operate financially, or the digital currency. And I think it's had too many, kind of tarnished reputation for that. But it's still something that can be bought and sold as a commodity. And that's what we're treating it as. We're treating gold, as a commodity, and now Bitcoin as a commodity, but more updated and modern. So maybe that is the reason. So, again, it's got every opportunity to get above 2,000 and test us and see what it does. And as I say, the 1% have so much money that they can make anything go up if they want to. It's just something else that can be controlled by the 1% and the Fed. But again, as I say, I like to sell it high. So as we're above these levels, again, into no man's land. So it could be some good opportunities to see big spikes on the 15 minutes, because there's certainly no levels here. But, again, it's just looking for price action. Markets can move very, very quickly. He's getting some action, in the opposite way of the dollar. Could just be an option to scalp a few ticks. But as I say, you don't have to be forced into anything. Just because the market is moving doesn't mean you have to trade it. But, what I'm saying to you is if you keep something like these 8 markets up and you see the correlation, the movement between them, that's much easier than looking for news on FX Street or looking for headlines on Bloomberg or even listening to the Squawk, because you'll always get the information from the markets quicker than anywhere else, because the markets are just that, Dow theory, the efficient market hypothesis. All the information's happening here, right here at the extremes. So you might see the euro move. That might give you an edge to move in the dollar or the pound. You see, gold move. That might be, again, something to move in the dollar or maybe get involved in the stocks. What you're looking for is just that short-term opportunity to nick those 10, 15, 20 pips, get your money in, get your money out, and repeat. Because anytime you're holding for more than an hour, a couple of hours, or days, you're giving up the opportunity cost. You're trying to take on the markets, you're trying to understand too much. And you're basically, in these markets, making a binary bet that, you have got enough money in your account or enough, stop ability to ride it out. And you probably don't. So why bother? Keep your trades short. When they're wrong, get them out. When they're right, bank your money and go again, rather than try and hold trades and take on the markets, because the odds are just heavily, heavily against you. What are the best indicators in FX and time frame? Well, no indicators. The indicators are all lagging. So the whole point is, if you're looking at indicators, as I've shown you a million times, I have them on the screen, but it doesn't mean that they're going to be any use to you, because they're lagging. So, look at the indicators here, like the buyer, so you should be buying here. Okay, well, it goes up, but then it comes down. It's red, you should be selling. Oh, it's coming down. Your indicators, of what's happening right now, your indicators, your best indicators, are your fibs on your shorter time frame. Am I above or below the 50% on the 5 minute? Below the 423.6. So that's a sell. Well, if we're a sell here, where do we break to? Well, I don't know. Then maybe it's a buy. Yeah, rejection on the 15 minute above a fib, because these are all different fibs and different time frames. So maybe this is a low point, close back inside the Bollinger Band, maybe a short-term buy in the dollar. Hourly, same scenario, a lot of upward room here. Very low on the dailies, broke the low. So maybe, again, just looking for short-term bounces off levels, trying to make 10, 15 pips. The dollar could end up here by the close of the day, or here. So what? Why buy and hold and put a stop in, watch your P&L go up and down? Yeah, be brave, trade bigger size, trade into extreme movements, looking for that quick turn and bounce. All the information you need is on the fibs on any time frame. That is the pure and simple. You don't need any indicators like RSI or your slow stochastics or any millions of ones I could name off. Not for intraday trading anyway, because they're all lagging. All they're going to do is trip you up and cloud your judgment. All you need to be doing is looking at the hourlies, for the kind of the trade setup. So for this, try and find some value to sell high in the New Zealand dollar. Try and find some low points in the pound to buy. And then, again, just look at your overall view of the markets. See what's moving, see what looks good, and then go and look at those 5 and 15 minute time frames and just be in for the short-term scalp. Just be in for the trade. Be in, be out. Get your capital out of the market. Look for the next trade. Keep doing it. Repeat, repeat, repeat. That's how you get good, because everybody's looking for that big trade, and you're either going to make some money or you're going to lose it. And even when you get in the big trade, it always could have been bigger. always could have been better. If you short-term scalp and trade, you're going to get much more satisfaction. And yes, you might make smaller pip profits. But when you get good enough, you can use bigger size. And, if you're trading like I do, hundreds of lots, you only need to be on side. And by the time you're out, you've made thousands of pounds just by literally getting out of market. But if you're only ever trading, £1, a point or, a lot of point, you need every single pip movement, from low to high to be able to make any money. And that's just basically short-term trading. It's short-term investing. It isn't actually scalping or trading. And that's where the money is to be made at the minute. Because as I say, if you're wrong when you try and take the markets on, it will take all your money and more. Yeah, another good question here actually from Terrell, just saying, you mentioned by buying a position holding in regards to what happens. Would you say have an account to hold another one for day trading? That is a very good thing. Yes, I would definitely separate your long-term view and your short-term view. So you can have an account for a position that you hold over days, weeks, months, years, however long it is. And then you have another account where you trade the movement in between. Because if you're trying to do it in the same account, you generally, will kind of end up tripping yourself up or, kind of cloud your judgment. Just because, you're 100 pips on side in a long-term trade doesn't mean to say that you don't want to sell it for 20 pips. You probably do because someone's going to take some profit intraday, don't they? So it makes absolute perfect sense when you're taking a long-term trade to trade it in the short term, and certainly, don't do the same trade. You don't have to buy it. If you see an opportunity to go against your original view, then do that. That makes perfect sense, So yeah, good question. Is Black Bull Markets a no dealing desk broker? Yeah, it's just they're just a liquidity provider. They just execute your trade. Well, there we go, guys. So, I mean, really for me, nothing's really changed. 2020 has just highlighted to me that, the global elite and the politicians just reserve the right to do whatever they want, tell you how to live your life, because you've got to still pay taxes. No matter what you do, you've got to still pay taxes and keep the system going. And if you do something wrong, you get put in jail. If you're someone like Donald Trump, you don't pay your taxes, you do lots of things wrong, and you don't go to jail. So that's just the mean and cruel world we live in. So we have to get over that and get on with it. So the markets are no different. Markets are going to do whatever they're going to do. So don't try and think that you have to understand them, because you don't. They don't make any sense at the minute. They are irrational. And, whatever data, or whatever kind of, fundamental thing you choose to believe, it's just a belief. You just choose to believe it because it's all, it's all manufactured. It's all kind of, just out there doing its thing. And when the markets do crash, that'll be to fund the Fed, won't it? And, to kind of, all these like Bloomberg articles, oh, well, the market's dropped and Jeff Bezos has lost 2 billion and Mark Zuckerberg's lost 3 billion. These guys never lose a penny. Trust me. I work in the kind of environment where I know they have their own family offices. I know what they do. They're always hedging. It's impossible for them to lose money. They are the market. They are the money. So don't worry about that kind of stuff anymore. Just concentrate on what you can do. And that's getting the markets around short-term areas of value. Look at your correlations. Look at your setups and charts. Look at your hourly 50-minute and 5-minute fibs. Pivot around that 50. If you think it's going up, buy low value for a bounce. If you think it's going down, sell, low value. Sell high value, for those short-term pips, and get used to banking your profit at every single turning point, taking the first profit that's available to you. Anyway, 2021 is going to be big. There's going to be lots of things going on. If you want my charts, you can have them for free. Just email me, steve@steveruffley.com, or Google Steve Ruffley. You can't miss me. I've got 30 pages on Google. And I'll be doing some more webinars in the new year. But these things kind of work best one-to-one. I can do more, one-to-one, showing you individual things and talking to you the other side. Because these things with webinar is, obviously, they're pointed at me. And I just talk, don't I? But when I can actually talk to you one-to-one and we can share charts and trade ideas and get, a lot more interaction with you and kind of help you out a lot more. But as I say, it is what it is. It's just a time thing. It doesn't take very long, but I need to kind of speak to people individually to do it. But yeah, outside of that, get yourself my book, Rough Guide to Trading, back in the top 100 seller books of on Amazon for trading. So just buy it, just don't mess around, just buy it and chat to me and we can see what we can do. All right, guys. Well, any new webinars, I'll post on FX Street, and they'll be coming up in the new year. I'll probably try and set out a more accurate schedule, because I'm just doing it one every kind of 6 weeks, 2 months at the minute, a bit ad hoc. But maybe I'll try and get some, something a bit more kind of steady in the diary of FX Street, and just, do something so we can kind of, see things through, talk about it, see what we're going to do, and then do it. Have some accountability, because a lot of people just don't have that in the markets. They don't have the accountability. They just turn up, they do something right or wrong, and then they stop trading, or they think they've cracked it and then go on, lose some more money. All right, guys. Well, anything else, just Google me, as I say, or get me at stephenstephenruffle.com, and have a good rest of the year and Christmas, if you can, in your situations. And I'll speak to you all in 2021 when it's hopefully a bit of a clearer picture. All right, guys. Have a good one. Thanks, FX Street. Take it easy. Goodbye.